And we are going to play the game of success and money. Money's a game, success is a game, and games are fun. Business is a game, and games are fun. Finance is a game, and games are fun. The stock market's a game, and the games are fun. We're going to go play a game because life's a game and games are fun. We're not curing cancer, we're just having fun. So we're going to play a quick little game right here. We've already given many people the code so they can jump in. I've got Daryl on with me. Daryl, if you'd like to share your screen, we have a fun little game we're going to play that you can click and come up with the answers. Okay, so it looks like we have about 35 people from all over the world that are playing. And let's go with our first question.
Your first question. Someone who uses money to purchase stock is an. Get your answers. So one technique or one tip that I would like to give everyone is the fast you answer, then the score will be higher. Get your answers in. Is it an advisor or an investor? All right, the correct answer is investor. So there are 28 of you who got the correct answer. Congratulations. But now let's see the leaderboard. For the first one, leaderboard is Noel, followed by Joseph, Christy, Ivy, and Harmony. Good job. All right, next question. The groups of stocks you own is your what? Your market or your portfolio? Get your answers in. Make sure to hit the answers correctly and fast so you can get higher score. 33. Correct answer is portfolio. All right, so we got our portfolio in our GoTrade. You can see that in your own account. All right, we got Noel, Joseph, Ethan B, Angie, and Russell for our top 5 individuals. Next question. To buy a variety of stocks, you should what? What do you mean to buy a variety of stocks? Is it diversify or dividend? Get your answers in. And for those of you who would like to join, we got our game pin right here at the bottom. So the correct answer is to diversify, which means we are buying different kind of stocks. We are diversifying our portfolio. When stock prices are falling, it's considered a blank market. Is it a bear market or a bull market? Get your answers in. So when the prices are falling, it means a bear market instead of a bull, right?
Okay, so let's tell them what the difference is. So the way it
Right.
looks like, if you are a bull, you've got horns and your horns are going up. But if you're a bear and you're standing up, you're swatting down. That's how they came up with it. So a bull's on 4 legs, it's got its horns and it's going up. That's a bull market. A bear's standing on its legs and it's swatting down, and that's where they came up with the down market. All right, so
All right.
that's an easy way to
That's
remember that.
interesting. That's interesting. Thanks,
You
Tom.
didn't you didn't even know that, did you, Daryl?
I did. I mean, when the market is bull market, it means bull run. It's a bull run. Then everybody's chasing for that particular stock. So we got Noel, Joseph, Angie, Mary, and Oliver. Congratulations. All right, next question. A measure of stock prices based on 30 leading companies. You know this, all right? 30 companies. Is it Leaders Index of Prices or Dow Jones Industrial Average? Right, 30 companies. You know that. Correct answer is Dow Jones, the Dow, which means 30 leading companies. All right. So for our score, we got new names right here. Got Noah still at the top, Joseph, Mary, Oliver, and Ethan B or Ethan Bird. All right. For the sixth question. When stock prices are rising, it's considered a what market? Is it a bull market or a bear market? All right. So get your answers in quickly and fast as you can. Right, 6 more seconds. Get your answers in. All right, the correct answer is a bull market when the prices are rising. Good job. All right. For our next question number 7. A portion of ownership in a company or corporation. What do you call that? Is that a stamp or a stock? Portion of ownership in a company or corporation. What do we have? We got a stock. All right. Got all of you got that correct? All right, next question. A professional who is licensed to buy and sell stocks. What do you call them? Stockbroker or a stock maker? Maybe Tom can explain what the stockbroker means and what the stock maker means.
Well, let's see how they do on getting the answer right.
Okay, they got it correct. Stockbroker, professional who is licensed to buy and sell stocks.
Yeah, but if you're buying and selling too much, because there's 4 ways to invest, but if you're buying and selling too much, a stock is going to make you broker. I get that.
You broker.
You're going to be broker if you're trading
you're
and
going
doing a
to
bunch of
lose.
trading. So
That's funny, Tom.
we're not looking for a broker. We're looking for an investor. So that's the difference in those two.
All right. All right, for 9th question. Stock prices may arise when economy is growing, products popular, or both. So the stock prices may arise when economy is growing, or product is popular, or both. The correct answer, of course, is both. When economy is growing and the product is popular. Oh no, Noel got the 5th place. Angie, Oliver, Marie, and Christy are on the top spot. Investing in stocks can cause you to what? Can cause you to make money or lose money or both. Investing in stocks can cause you to make money, lose money, or both. Well, of course, the correct answer is both. It can make you money or lose money. All
Okay,
right.
let me jump in for 1 second,
Tom.
guys. So before you go there, it's the value of those stocks. You know, the stock, you have the number of shares. What I'm mostly interested in is the number of shares that you own. The value goes up or down depending on how many people are buying, how many people are selling, supply and demand. If you have a lot of sellers, then the price goes down. If you got a lot of buyers, the price goes up. And if the company's making a lot of money, it's going to go up. We don't follow it. If you're watching the stock market on a daily basis, that's like jumping in the front of the roller coaster because you want to have the thrill ride of having it going up and down. You hear it on TV, the Dow went up this many points, or the S&P went up 200 points or went down 100 points. That is the stupidest thing I've ever heard. We don't care what the points are. What we care is the percentage. It went up 0.5%, went down 0.5%, or whatever it is. So just be aware that you own so many shares of stock. I don't care what it's worth today. I just want to know what it's going to be worth in 5 years from now or 10 years from now. And again, when we're buying stock, when we're investing in stock, if you just own one stock, it's going to be more volatile. It's more of the roller coaster. But if you own 30 of them, you know, some of them are going up and some are going up, some are going down, but most of them are more stable. So it's going to be more stable. It's not going to have those huge whips. If you have 500 companies, then it's going to be a lot more stable. You know, it might go up and down, but it's the kiddie roller coaster. And if you have 1,000 different stocks into an index, that's even more stable. It moves up a little slower, faster, slower. It's not nearly as much of the roller coaster because there's a whole bunch of them that are part of that index. And again, we're going to talk about the 4 ways to invest in the stock market. You pick and choose, you lose. Now, if you have $100 or something and you want to take $10 of it and pick and choose, go ahead, have fun with it, knock yourself out. But number 2 is you can hire somebody, you got to pay fees. Number 3 is that you can get an index, which is the 500 biggest companies in America, which is pretty solid. And then my favorite is Berkshire Hathaway because it's outperformed the S&P, which has outperformed the mutual funds because of the fees, and they all beat picking and choosing. Okay. All right. So go back to you, Daryl. How are we doing?
Well, thank you so much for that explanation. That's very insightful. We got Oliver at the top spot, Christy, Noel, Joseph, and Harmony. All right. Our next question. The price a stockbroker charges to buy or sell your stocks. Is it a fee or a commission? This is the price a stockbroker charges to buy or sell your stocks. This is what Tom is saying a minute ago, where, you know, person who is in charge for your portfolio has collecting this, having this. So it's a
Okay.
commission.
And I want to talk briefly about that if I can. So
Sure.
the day you buy something, you're going to be charged a commission. There's a commission that you're going to be charged. If you have a mutual fund, you're paying this manager to actively manage that money over time. So if the day you buy it, there's probably a commission that they're going to charge you when they do the first transaction. But if you have $100 in that stock, they might charge you 2%. You probably won't ever see it unless you dig into the small print, but they're going to charge you about 2%. So for every $100 you have in there, they're going to charge you $2. So that is what we would call a fee or money under management fee, which is ongoing. And the reason when you look at the four different ways to invest, you know, Berkshire Hathaway is a stock. And so there's a small commission, but there's no money under management. There's no fees. There's small commission, but there's no fees. The S&P 500, they're not making decisions. They're not making decisions. They just take they're just take the 500 biggest companies and put it into the index. So the fees are much less. They're about a half of 1%. Mutual funds are different. You're paying somebody to actively buy and sell, pick and choose, you know, and those fees can be very low, but they can be 1 to 2%. And so if all those different categories, Berkshire, which is my highest one, S&P is the next one, mutual funds, if they all made the same rate of return, let's say they all made 10%, well, Berkshire's, there's no fees, there's no money under management. So you made the whole 10%. The S&P, if there was a 0.5%, then you'd make 9.5% because there's a 0.5% ongoing fee for them to manage it. But there's nobody's managing Berkshire, so you pay a commission, but there's no ongoing fees. The problem with the mutual fund is that there's a commission up front, and then there are yearly fees of 1 to 2%. So if you made 10%, they're going to take 2% of that, which means that you only made 8%. And then picking and choosing, that's the Wild West. A lot of you like to play that. Great. Take 10% of your money, 20% of your money, and go do that and have fun with it. And then when you're smarter than the 500 biggest companies in America, or you're smarter than Warren Buffett and his army, he's got an army of people. That's a massive organization. Then you can change your allocation and say, I'm not going to take 10%. I'm going to take 20 or 30%. So that's the difference between a commission and a fee. How are we doing?
All right. All right. We got new names on the board. We got Oliver still at the top, Joseph, Harmony, Inch, and Christy. For our 12th question, people are only allowed to buy stocks in companies which are privately funded, owned by one person, or publicly traded. So we are only allowed to buy to which companies? All right. We are only allowed to buy the companies which are publicly traded.
Can I jump in there? Actually, you can
Sure.
do all three, but the easiest way, because they're already public, you can buy and sell without asking anybody permission. You just open an account, you say, I want to own some of this, and it's very, very quick. So that's why we're talking about publicly traded companies.
All right. All right, Christy and Inch just swap their places. Number 13, all stock prices are listed in what? Listen to list or points. And Tom, you might just want to jump in.
I'll let you answer that one.
The correct answer is points. So all stock prices are listed in points. We got Schwa on the board. For number 14, a mutual fund is a what? A mutual fund is a private fund or group of stocks. The answer is group of stocks. For our last question, you got a double points. So the Nasdaq is a computerized network of blank companies. 5,000 companies for 2,500. All right, 5,000 companies. Okay, let's go to the podium. Let's see for the top spot. We got Inch, third. Second is Schwab. Congratulations, Schwab. And the first one, Oliver. Congratulations. And our fourth and fifth is Harmony and Noel. So congratulations, guys. Tom, would you like to reward them some profit bucks?
No way. I think this time we should have them sending me money. How come I'm sending
Yes.
everybody money? Yes,
Yeah, I think that's
we'll
fun.
we will send you just a little bit of stock, money for your stock account. So congratulations for every one of you that are playing. And if we've got I know we got the top three. If you know all top five, we will do the top five.
All
Okay.
right, all right. Sounds good.
So congratulations to all of you. Watch your account. You'll probably get an email telling you that we put your money into your account. But congratulations. Nice job.